Managing Director and Vice Chairman Designate of Lupin joins us to talk about what exactly is happening in the Indian pharma sector and what should one expect from US FDA in the near term, because of late US FDA has been rather stringent. Kamal, good morning. Thank you for joining us.
Yeah, so I believe it is the 4th anniversary of ET Now. It has always been my pleasure to interact with the anchors on the channel, and I think ET Now has been a very responsible channel for delivering the best and the latest in business news. I'm very happy to hear that this is the 4th anniversary, so all my best wishes to the channel and look forward to keep interacting with you. Thank you.
Thank you so much for those wishes. But your management, coming back to your business now, has indicated that they would acquire brands now going forward. Give us a sense of what exactly are the regions and product types that will be part of this strategy.
Yeah, you're right. I think we would like to acquire brands for our US business. We would like to acquire some businesses in geographies that we are not operating in. And we would also like to acquire certain companies with technology platforms. That has been the endeavor for last couple of years, year and a half to be more precise. We have come very close to some of those, but haven't really made the cut for various reasons. Could be financial, could be, strategic, and the like. But you're right, I think we are going to make forays into those areas, and that's a very normal course for the business, really.
Right, but on acquisition news, the company has cash on the books to the tune of about 500 crore. How do you plan to raise funds if acquisition is bigger and bigger than your current cash position?
Yeah, certainly. I mean, besides the cash, as you mentioned, our debt equity is 0.13, which is as good as no debt on the books. And that gives you immense capability to leverage balance sheet, even if you went 0.5 or 0.6 debt equity. Besides, you could structure certain debt on the target asset. So together, I think Lupin has a lot of capacity in the balance sheet to borrow money and fund its acquisitions.
What's the status with Antara as well, given that Mylan has launched the drug? How much market share has the company lost, and what's the price reduction then?
Well, I don't know whether from where one gets those estimates, but the fact is that we have a pretty smart commercial strategy in place. And you can see from the IMS data that we continue to hold about 30-32% of brand share and 38% of the generic share. So despite a generic launch, we've been able to control our share of the market at around 68 to 70%.
How is the company now looking at keeping growth momentum in the branded business, given that Antara will have price erosion and there is a risk to generics for Suprax? Brokerages have indicated that they see a 15 to 17% CAGR decline in the branded business, which for you means loss of margins and loss of top line.
Yeah, I think certainly brands are a key part of our portfolio in US, and we are constantly on lookout for opportunities, and I think that's where major attention is currently being focused, to acquire brands which will fill the vacuum, if you may say, created by Antara's genericization. So and I'm pretty certain that we'll succeed in time to arrest that that situation.
Mr. Sharma, the company introduced only 10 products in the US in FY13. Street believes 15 plus is possible. What's the pipeline like for FY14 when it comes to new launches?
Well, subject to FDA approvals, I think we hope to launch about 15 to 20 products.
Post the launch, can you give us an indication of the performance of Tricot?
Tricor has been, I mean, you can get the IMS data. I think our market share is about 34%, second to Teva, which is around 44 or 45%. We know that Mylan has now launched, so it's early time to really see the new equation. But as we sit across, I think it continues to be 34% for Lupin.
And could you indicate the current scenario post Mylan launching the drug? Because you did about $70 million in FY13, and analysts do believe that FY14 will fetch you about $75 to $80 million, which means pricing pressure is quite visible.
I have no reason to agree or disagree, because it's very difficult to forecast the market dynamics. As I said, Mylan has just launched, so we'll see how it turns about. We would always have a desire to hold on to our market share, and the competition will always have its endeavor to eat into your market share. But I think one has to really work out a fine balance between market share and the price pressure.
Right, what is the update on launching of Yasmin and Yaz, and are you now concentrated about possible liabilities of launch in this case?
At the moment, there are issues with the patents, so I think only when that clears, then we will be in a position to launch them.
Right. Mr. Sharma, how is the Japanese market playing out for the company, and what kind of growth can we see from this market? How is the currency as well impacting you?
Yeah, I think the Japanese market on one hand remains very promising because, as you know, generic business is just kind of growing there and is being pursued by the administration to grow that business more rapidly. At the same time, competition is also increasing in Japan. So we have grown on an average about 14 to 15% in yen terms since the time we've been there, while the market has been growing on 7 to 8%. Going forward, we would like to maintain the same growth rate by virtue of launching more products. Also, as you know, we have acquired another company, which is an injectable company in Japan, and along with injectables, I think we should have much better traction into the hospital market, along with our oral solids. So, in terms of growth, I think we certainly feel that we have a good story going. But I must mention that yes, competition has been strengthening over the last few years, because everybody seems to be now interested in the Japan story. As far as yen is concerned, yes, I mean, depreciation of yen, which started for last 1 year, is definitely going to affect and make a translation impact on any company which does business with Japan. But the extent of which can only be assessed at the end of the year when you know when you do the final accounting.
Okay, Mr. Sharma, good having you on the show. Appreciate you taking the time out and joining us on our anniversary week.